Let's start with the golden Forex numbers though, because May, we did see that rand coming under a little bit of pressure, so trading above 7 rand. Do you think that the SARB cut back perhaps its purchasing activity?
I think from what the bank says in their statement, is mostly valuation adjustments. So it could be the weaker rand as well as the fact that the dollar appreciated against most foreign currencies, including the rand. So most of that I think would be valuation.
So nothing
really a change in the stance.
Nothing to be concerned about, and we are still going to see the SARB coming into the market when appropriate.
Yes, and then cream off as they usually do. I don't think there's been a stated change in the bank's policy in accumulating reserves now.
Now, we had the Trade and Industry Minister, Rob Davies, yesterday saying the rand was too strong. This is something that the government's been chatting about for ages, continues to chat about, but it's really something that they can't control, because we've seen with other countries like Mexico, like Brazil, over in the Far East, where governments and reserve banks have very little control over currencies.
I think the minister is mostly reflecting what the manufacturers are saying. I mean, the government has gone out to say they want to create employment, they want to see more of manufacturing increasing, generating jobs in the industry, particularly in the small medium enterprises, and those are the ones that are going to generate jobs. So if you don't see them growing, and if they're telling you that the reason that they cannot plan ahead is the volatility, one, in the rand, two, the fact that the rand is too strong for them to compete internationally, I think the government is just merely echoing that part of the economy. And I think we've been through this, particularly last year, even in 2009, that the manufacturers would say we want a rand preferably between 8.50 and 10 rand to the dollar. However, I think as government, they need to balance that against inflation. Do we want to import a lot of inflation into the country? And I don't think anybody has ever gone out and say if it's 10 rand to the dollar, you're going to compete, you're going to be competitive internationally. But I think that's where the minister is coming from, because manufacturers are concerned that they cannot trade profitably at 6 rand something to the dollar.
What's your view on that? Because last week we had first quarter growth numbers up 4.8%, beating expectations. The manufacturing sector driving that growth, growing by 14.5%, albeit off a low base, but it looks like the manufacturing sector is doing all right despite the rand strength.
The manufacturing sector is doing all right despite rand strength. But what you've got to see when going forward is, if you don't see a pickup in domestic demand, if we see a slowdown in global economy as predicted, if those two things come to pass, you're going to see that manufacturing going forward, particularly in the second quarter of the year, is not going to be as buoyant as it was in the first quarter. And then when we look at the PMI numbers, you can already see that it's trending off a bit. It's still expanding, but I don't know if we're going to see as big an increase as we've seen in the first quarter of this year.
Well, that takes us to the Business Confidence Index, and that was released by the Bureau for Economic Research just a short while ago. And it's fallen from 55 down to 48, so it's back into negative territory. So we have more than half of the respondents saying they're dissatisfied with prevailing business conditions. Interestingly, though, unchanged in the manufacturing sector again. So business confidence remains the same in the second quarter as the first quarter in the manufacturing sector. In the retail sector, though, down quite sharply, also in wholesale. So does that give you an indication of what the consumer's feeling at the moment?
Not really surprising. I think we've talked about that in the past, that the fact that consumer spending was so strong, particularly in the last quarter of 2010, in my view, was propelled by one-off factors. Salary increments in 2010 were very high, much higher than inflation. So that boosted consumer spending. Disposable income increased, not because the number of people employed necessarily increased, but mainly because of above-wage settlements. And that is not going to continue into 2011. We've already seen that employment itself is down, unemployment has gone up, and wage settlements are not going to be anywhere near what we saw in 2011. So if you don't see an absolute increase in numbers, and you don't see an increase in wage settlements anywhere near what we saw last year, I think you're going to have problems. Equity markets, yes, they're still doing well, but house prices are not recovering as much as we would expect that they would have to support spending. So I don't think consumer spending is going to increase. And if you look at the debt numbers, I mean, the bank is going to publish the first quarter data in a couple of weeks' time, but I don't think you're going to see that coming anywhere near, for instance, 70%. It's still in the high 70s currently. It will be interesting to see what is going to be in the first quarter. But consumers are still very highly indebted. Now we're looking towards the end of the year, possible change in interest rates. You're seeing an increase in inflation, food inflation, petrol prices, albeit, although we've seen a slight dip last time. But I mean, those things are all pressurizing consumers, and I'm not surprised that retailers are feeling the pinch.
And we were talking about quantitative easing later in the program and how that really hasn't filtered through to the consumer in the United States.
Yes.
Now, we have ultra-loose monetary policy here in South Africa, so the lowest interest rates in over 30 years. Why is it not feeding through to the consumers? Why is it not making the consumer more confident here?
Well, for me, it gets back down to absolute job numbers. If you're talking about the consumers who currently have a job, they are already very highly leveraged. They are still working down the high debt levels that we've seen in the past. Yes, they're getting salary increase. They're slowly working that down, but nowhere near where we would like to see. And as a result, credit extension is not increasing so much. They're not borrowing to spend. So that is a worrying problem. If you don't see a change in the employment numbers, and by that you have to have the economy growing substantially, is a problem. But how can South Africa grow on its own if the world economy is also not growing as much as we thought it would earlier this year? So I think that's a dilemma that government faces.
And you mentioned that the PMI out last week, where we saw in the manufacturing sector still not employing people, so that was still a negative reading for that. When did you expect employment to start ticking up? Do you think we are going to see that number get better this year?
If the economy consistently grows at least 4.5% as we've seen, I expect to see towards the end of the year we're going to see firms adding to their salary bill. However, if everybody's talking about the uncertainty of the global recovery as well as domestic recovery, you're not going to see people getting people into permanent positions. You just have to go through the hassle again if the economy dips of retrenching those people. What we've seen is that there's a trend towards getting temporary contractors to fill in positions, and that's not what we want. What we want is an absolute increase in permanent employees, and we won't see that if the economy doesn't grow by at least 4% throughout this year. And we know that the forecast, nobody has forecast anywhere near 4% for 2011.
Is this the sort of recovery you would have expected given the severity of the downturn in the financial crisis of a couple of years? Would you have expected us to stutter along at this pace?
For South Africa, I would have expected that, but I did think that in the global economy, which was going to feed through to our manufacturing sector for exports, which was going to boost the economy, I had expected that it was not going to start slip into a slower growth. I thought it would be much better than what it was, but it's not working out the way we thought it would. I mean, major economies like the UK are slowing down, the US is slowing down, they're not creating new jobs, and if that doesn't happen, consumer demand that side doesn't increase as well, and we need that for that to increase for the manufacturing sector. Holding everything else constant like the rand, we need at least an increase in global demand for that to increase here, manufacturing to do well.